Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Tracking the forex market together, part 1. So I am presenting this webinar on June 17th between 9 and 9:45 GMT. So we'll be tracking the market using the live market code page. I'll give the link for the same in the outcome window. You can open it in a browser. I'll also focus the camera over that of the live market code page now. Okay. You should be able to see the live market code now. Euro is currently trading around 1.4165, 1.4167, 1.4128 is the low, 1.4221 is the high. This high was set during start of the Japanese session when they made a brief upward stoppage, and subsequently they are just making swings between the low and the high. They breach the initial low and come above, and they are just holding at the middle level. You come across 36 pips negative net change or 37 pips negative net change. That means from that of yesterday's close, Euro has dropped about some 37 pips currently. So yesterday's close was 37 pips or 36 pips higher than that of current level. That's what it refers to the net change. Then you come across the GMT time. So follow the time to understand the various sessions that players follow and try to make the trades. I will focus more on explaining how to use the live market code page for your market understanding and anticipating the next type of move, what they could do it, so that will be helpful for us to take a trading decision. So I can take the trade and show you that I earned profit, but I want you to understand how to take such decisions. So I am trying to focus on that in today's Tracking the Forex Market Together webinar. In the case of GBP, it is currently, so Euro is trading in the middle level between the high and the low. Okay, then GBP is trading around 1.6116, 1.6120, 1.6095. The initial low they breached and found a new low, 1.6095, and 1.6168 is the high. You come across 39 pips negative net change. So from that of yesterday, it has made a drop of yesterday US session close. It has made a drop of 39 pips. That's what it refers to. Now we are already past the Japanese session. It is 9 GMT. So it is the early part of the European session, and European session starts by 7:30 GMT, and from there up to 9 GMT is the early part. Then that gets over. Then afterwards you come across the mid session. So currently in the mid session the market looks very subdued, and both Euro and GBP are showing negative net change, indicating USD gaining move. And in the case of Yen, it is trading around 80.38, 80.41. 80.40 is the low. A new low has been formed. 80.66 is the high. So a narrow range of 26 pips is seen in the case of Yen, and it shows 22 pips negative net change or 20 pips negative net change currently. So when Euro and GBP are showing negative net change, that is USD gaining move. Whereas when USD Yen is showing negative net change, it is the USD weakening move. So when they make USD gaining move in Euro and GBP, USD weakening move in USD Yen, it is referred as a contrarian move. Why they are doing this particular move during the mid session? If you look into that of the Yen crosses, Euro Yen and GBP Yen crosses, you find they are showing the negative net change. Because both Euro, GBP and USD Yen are showing negative net change, the cumulative effect is seen. So when it is around 30 plus and 20 plus, you find about 56 pips negative net change or 53 pips negative net change in the case of Euro Yen, and 62 pips negative net change in the case of GBP Yen. So it is a mid-session, so you can focus on the crosses, but you have to see whether the market is near that of the low. When you want to do trades in the crosses, then you have to look into that of the respective majors. Say for example, I want to take a position in the case of Euro Yen. First of all, you have to look into that of the numerator in that particular cross, Euro Yen. Numerator is Euro. So Euro is a little bit firming it up, and it has come to 1.4178. Then I have to look into that of the denominator currency. That is Yen. So Yen is a denominator currency because it is on the denominator side of USD Yen. USD is the numerator here. Whereas in the case of Euro and GBP, USD is the denominator. And USD is the common currency against which all the majors are trading. So we normally call it as Euro USD. Instead, we simply call it as Euro GBP. Whereas in the case of Yen, we call it as a dollar Yen or just USD Yen. Or in the case of USD CHF, you call it as USD CHF or Swiss C. So that way you will be able to differentiate the numerator and the denominator positions of these currencies. And they are nothing but the ratios. So once you divide Euro divided by USD, you come across this particular ratio. That is how these ratios are being derived up to that of the fourth decimal. In the live market code page, you come across the fifth decimal also, and that is meant for the banks. So you can just ignore it. Up to the fourth decimal, you can see it in the trading platform, and that can be used for your trading decisions. So when you see that the contrarian move on the downside, then you look into that of the respective currency, Euro Yen, and see that the low in the case of Euro Yen is 113.74, and currently market is trading 25 pips above or 25 to 30 pips above. So 114.10, 114.13, 14 are the current levels, 114.70 is the high. So when they are making a move of this nature, they could push it down further. So they have already done the pushing downward, and because of that, you find that 113.74 has become the low. So this low has not been breached in case of 30 minutes of our observation. Then we can try to take a buy position closer to that of the low and keep about 50 pips hedging order or a stop. In case the hedging facility is available, we can keep the hedging order. Otherwise, we can keep a stop of 50 pips, because if you try to keep 30 pips, the spread between the bid and the ask is higher in the case of the crosses, so they can easily hit it. That is why you have to keep the stop slightly away. So 50 pips is ideal because they do about 35 to 40 pips swing near that of the low. So that is how they gain the level. So if you want to buy, instead of simply taking a position at the market, you can keep about 15 pips below that of the current level, a buy order. In the case of the crosses, you can keep about 15 pips below than that of the current level. So 114.13 is the current level. So we can just keep a buy order 114. So that way about 14 to 15 pips below that, or you can just keep it slightly lower also if you want, closer to that of the low. Then when it comes to closer to that of the low, you try to take a buy. The chances of further drop will be limited. And similarly, when you try to buy near that of the high, the chances of it to come to that of the low is very great, because normally they make the swings between the high and the low during the mid sessions. So in such a scenario, you should be able to handle it carefully. You may have to keep about 100 pip stop and things like that. Instead, wait for them to come closer to low and then try to take a buy position. Now you find that Euro is firming it up. It has come to 1.4197, 1.4199. So when you look into that of the live market code page, you find that it was earlier about 35 pips negative net change, and now it is about 6 pips negative net change. Whereas if you look into that of the candle formation, it might appear, the 20 pips rise might appear as if it is a very big rise because of the 3 green candle formation. But each candle might be of about 7 pips. But when the market is in a narrow range, the chart gets magnified automatically in order to accommodate the narrow range, and then it will appear like a big candle. But actually you find that they gained about 20 pips. Still, from the start of the session, they have not breached the high. So, when they have not breached the high from the start of the session, and even if they breach the high during the session, it might be a brief upward stop in, and afterwards they are expected to make the slide. So now we come across a great opportunity to take a position in the case of euro. So let us see how far they are coming to that of 1.42, the psychological level. Then subsequently how they are handling 1.4221. When they are closer to low, and in your observation they are not breached that low high for more than 30 minutes, you can take a sell position near that of the high. And if the market is in the middle level, don't just get perturbed and don't think that I missed the opportunity of selling it here, so let me sell it around 1.4144 and things like that. That becomes an impulsive trade. Instead, you wait for the opportunity to come. The market continues to give that opportunity. It cannot continuously drop or it cannot continuously rise on all days. And they have to make the swings in the market. Only then the traders will place orders. So you know that on Wednesday and Thursday they made the drop, and after the drop, you know that most of the traders holding the higher level long, they would have just offloaded, and subsequently they would have turned short in order to just earn back the lost money. So in a situation when you come across it reached to that of most of the longs are being liquidated and the traders started building sell positions. So when the traders started building speculative sell positions, the players gain the levels like this and induce them to do the short covering, even though if anybody is holding a higher level long position, they don't give the profit booking opportunity, but from that at the bottom they gain the level and see that those who have gone lower level short do the short covering, then subsequently they drop. So they are very, very smart. So they don't easily give the profit to that of the higher level long holders if they simply wait. Similarly, after the visible drop, if somebody takes a sell, they don't give them the profit. So when the market looks uncertain, if a trader has taken a position, then they give the profit. So for that, we need the market reading, which is most important for our trading decisions. And by looking at it, if you simply think that can euro go up or come down, so what I am supposed to do and things like that, then you will come across definitely uncertainty. You can look into that of the charts, or you can look into that of the various other parameters, etc., or fundamental analysis, etc. But invariably, you will come across, they may give the clue, but still you don't get convinced. So immediately you think of keeping a stop. So when the stops are being filled out 2-3 times, then you hesitate to enter into that of market because you think that however best the study might be, when I keep the stop, they are hitting the stops. So what do I do for that? So in that scenario, what you have to do is use a simple tool, the live market code page, and just spend maximum time in observing the live market code page. You will be able to get that insight of trading. See, they have come to that of 1.42 in a very quick way. You know, from that of 1.4176, they have come to this. And is it difficult for them to break 1.4221? It is not if they want. But let us see, after coming above that of 1.42, are they breaching the high? And in case if they breach the high, you just wait for 30 minutes and see whether they are doing a stop and on the upside and come down, or they wanted to make an extended move on the upside. So we can objectively watch it and try to take, after all the noise, the position. Still we will be able to earn money. Instead of taking a lower level position and later on increase our waiting time. We can wait and observe the market. When the good opportunity comes, we will try to take the sell positions near that of the high, if the market is near that of the high. If the market is near that of the low, then we will try to take a buy position. But since the trend is down, so it is better to wait for that of the gains, intraday gains, and try to take a sell positions rather than trying to do a buy and sell trade. Buy and sell trade, you can do it provided you have adequate equity and you have the mechanism to limit the risk of keeping stop or the hedging order. And in case if you try to trade just like before without any stop and things like that, then it might become a dangerous trade or it might erode your usable margin. That is why I give in a blog the suggestions that avoid doing a buy and sell trade. You can do a buy and sell trade, buy near that of the low when the low has not been breached and try to book profit. But if you become impulsive and they are not rising, then immediately you might close and turn short and later on they may rise, then you might find it difficult. So in a market on the downtrend, the sporadic upward swings will happen. In order to induce the traders to keep lower level buy orders, and also those who have gone short at the lower level, they will induce them to do the short covering and later on they drop it. So this we need to understand. Thereby we will be able to sensibly take positions in the market. Now in the case of GBP, they are making a small firming up move, but they are not come closer to that of the low high. And this is mainly they wanted to handle Euro GBP. If you see Euro GBP, which has gained about 11 pips and it has gone above that of the psychological level 0.88. Because they in the mid session they wanted to handle the crosses. So Euro GBP they gained. How? By holding GBP and making a very nominal gain and gaining more levels in the case of Euro. So this Euro gain is not the actual strength of Euro. This is mainly to gain level in the case of Euro GBP. So at that time, they may not breach the high. They may come closer to that, but they may not reach. And in such a scenario, you can take a sell, but not immediately. You can just watch whether they will be able to breach it. And during that upward stopping, or when they go above that of the high, or when they come closer to that of the high, you can watch and take a sell position. Because they are holding it above 1.42 for more than 10 minutes. There is no hurry to take a sell position immediately. So give enough time in observing the quote and then try to enter into the market. Will be really doing a very wise trade. Coming to that of yen, they formed 80.40 as the low and still hovering around that of the low. They are not breached it. And in the case of CHF, after trading in 0.83 level for a long time, they have come to 84 and 84.67 has become the low, which is market is closer to that. And 85.09 is a high. You come across 5 pips negative net change. So in the case of yen and also CHF, you come across the USD weakening move, a nominal USD weakening move by 5 pips. So these are all the nominal contrarian moves they are trying to do it. Now they have just breached the high in the case of Euro, 1.4225 by 1 pip. So they might try to do a brief upward stop and then drop. So we will make use of it to take a sell position. So if you look for a good opportunity, then we will be able to really trade well, rather than simply thinking that we have to take a position and the market has to move as our expectations. Then in the case of Canadian dollar, all along it was trading around 97 area. From there it came down to that of 96 area as a brief downward move, and then it has come to 98 area. So they always make a quick downward move and hit all the stops and then start gaining the levels. So in the case of commodity pair, the Canadian dollar, you find a positive net change. And in the case of Australian dollar, a negative net change, almost flat. So what do you understand? The commodity pairs are trying to do the USD gaining move. Now you find both are doing contrarian moves. Both USD CAD as well as Australian dollar are showing positive net change. So it is almost 0-0. So let us wait for 10 minutes and see whether they are making contrarian moves. When they make such contrarian moves, you understand they are handling the crosses and not the real strength and weaknesses of the major. In case if you want to take the positions in the case of major, the ideal time will be the early part of the session. So during the start of the session, euro was near that of the low, not breached the low, then there was an opportunity for us to take a buy and quickly book profit during the gain near that of the high. So this is how the swing trades are to be done. So it is not the calculations of, okay, I have to get about 60 pips or I have to get about 100 pips and things like that. It is a question of the capturing the maximum possible profit during a swing between the high and the low. So the high and the low, the players set it and they try to make the swings between them, and you have a great trading opportunity of just buy closer to that of the low, like 41.30 or 41.40 and things like that, and just close it with 60 or 70 pips profit when they come to about 42 area. That way you can do it, and for that you need enormous understanding of the market. Similarly, they made a downward stop in the case of GBP during the start of the session and subsequently came above that of the low, and now they are firming up. So the high is 61.68. So euro has already come to that of the positive territory and GBP is slightly around that of the 10 pips negative territory. So when euro has gone up, so obviously GBP will also follow the sentiment and try to come closer to that of the high. And let us see whether they are breaching the high or not, and then try to take position. Then, in the case of commodity pairs, you find that they are just showing the positive net change. So they are all mainly to handle the respective crosses. So when you are trying to trade in the case of the crosses, you have to see, in case if you want to trade in the case of euro and GBP, see euro is having a positive net change and near that of the high, it has breached the high 1.4224 and just staying above briefly. And GBP is just showing negative net change. So they are trying to gain some levels in the case of euro GBP. The high is 0.8809. See whether this particular high has been breached or not in 10 to 30 minutes of observation. And if it is not breached, you can take a sell position and keep 50 pips above your hedging order. So if you take a commitment that only near that of the high set for the day, I'll take a sell and buy trade. Only near that of the low, I'll trade a buy and sell trade. If you think and make it as a very clear rule for you, then you will find that the market swings will continue to give the trading opportunities for you. And the long-term trend is down at the current situation. Next month also, euro and GBP are expected to swing and drop. So in such a scenario, whenever there is a good gain, you try to take a sell position. And afterwards, keep some stop of 30 pips. And many of the traders have got the tendency to not to keep the stop. And in that scenario, you think of spreading the risk. In case if you are capable of taking one standard lot as sell position, according to your usable margin available in the trading platform, instead of taking one lot straight away, you split it into 0.2 lots or too many lots you try to take it. And in case if they rise about 100, 120 pips or 130 pips, keep another 2 lots, many lots sell. And if you continue to take sell positions like that, how far they can rise? Afterwards they have to drop. And when they start dropping it, you will find that the highmost level sell will make the profit. You can book profit, and then lower level sell will book profit, and you can continue to book profit waiting for that. Instead of simply taking one lot, and when they go against you, and go helter-skelter and find out what could be the remedy for that. And then you go in for the crisis management, and in a worst case scenario, you are afraid of the margin call and close the position. Later on you find that market comes down. So avoid those things, and for that use the concept of spreading the risk. So let me go back to that of the PowerPoint presentation, because I thought that I should explain how to read the live market quote page. Many of the people think that I am only capable of reading it, others are not able to read it. It is not that I wanted to keep it as my trump card. I want everybody to learn how to read the live market quote page. So let me go back to the other PowerPoint presentation. What I explained, I am just showing it in the PowerPoint presentation now. The session timings. So now we are in the European session, 7:30 to 13 GMT. So 9 GMT is over. Market has come to that of the mid session. It is 9:25 GMT in the mid session. 13 GMT, the European session gets over. 13 to 13:30 GMT is the gap time. The gap time moves. If you track the gap time moves, you will be able to easily understand what is going to be the move in the session. During the gap times, they drop Euro and GBP. You can understand in the first 30 minutes or in the entire session, they could rise Euro and GBP. So that's what's happening now. They made the drop, Euro, GBP, and now they gain the levels. And afterwards, during that of the US session, they are expected to drop for a weekend. So they are just gaining the levels, and those who have got the higher level long, those who have got the lower levels short, they will try to do the short covering. Those who are at the higher level long position, they will wait for the market to come closer to their entry level to exit out of that. In case if they are not able to come out, then they will come for the selling for the weekend. And then you'll come across the US session starts by 13:30 GMT. You could come across a small gain and then subsequently the offloading of the positions to continue for the weekend. So whatever I explained with regard to this, which is shown in this PowerPoint presentation, it is being recorded, so you can go through the recording later on, or I explained it in the earlier Tracking the Forex Market Together webinar also. You can just go through the slides. They are all self-explanatory here. So if the market is near that of the high, we can try to take a sell position. If the market is near that of the low, we can try to take a buy position. Once the position makes profit, you can keep stop at entry about 20-25 pips. Then you can keep the limit exactly at the opposite side. If you're taking a buy position closer to that of the sell, closer to that of the high, you keep a sell limit order. And if you're taking a sell, then closer to that of the low, you try to keep a buy order and trail the stop. So the market could either hit the trailing stop to get the minimal profit, trailing the stop with 15 pips away from the market, or it might hit the limit and give you the maximum profit. The going is good, you can just move the limit away from that, and if the going is no good, market momentum is very slow, then try to close it near the low. They may not make any big move. It all depends upon the volume for them to make big moves in the market. See, on Wednesday, you know that Euro dropped about 350 pips. And don't think that every day they will make a drop of that nature. So that is why we need to understand. In case if they breach the high, say for example in the case of Euro, they breach the high. Now the initial high, we have seen it as 1.4224, and now they have formed 1.4242 as a new high. And just about 10 minutes over, you just watch for about 30 minutes to find out whether it is a stop hunt. Stop hunt and the false moves or a move happen in less than 30 minutes. So about 9:15, 9:20, they just hit the high and started going up. And before 9:45, if they come 9:45 GMT, if they come below that of the initial low 42.24, then you understand they made a brief upward stop hunt during the mid session in order to handle the crosses, and subsequently they wanted to drop. If the stop hunt is on the upside, is mainly to hit the stops of the short sellers, then afterwards they drop so that the short sellers don't book profit. Similarly, before making a rise, they make a downward stop hunt and then go up so that the long holder is stopped out and he is not able to book profit. So it is a cunning way of acting against that of the traders that you need to understand. The false move is the one they come up to that of the high and then drop it without breaching the high. And if they do a false move, then the next move will be an extended move. So if, for example, they come closer to that of the low and then come up quickly in less than 30 minutes to that of the high and breach the high and stay above there for more than 30 minutes, then for 2 hours they will continue to rise. So they have not done the false move on the downside now, you know that. They breached the low also. So obviously the current upward move is nothing but a stop hunt. So if you track the moves very carefully, you're able to easily predict, okay, they had done a downward stop and afterwards they are doing the upward stop and before making a drop, so that they widen that spread between the low and the high. So if they make a false move only, then you can anticipate the extended move. If they are not done the false move, you will not come across the extended move. The intentional move is just following a move of the extended move. So when they gained for 2 hours, that is, they quickly gain the levels without buying much from that of the market. Then subsequently, they make a slow drop. So that, say for example, if they have bought about 50,000 lots, during that of the rise, they will try to sell about 100k lots in a slow fashion. So that actually they are sellers, they quickly gain the levels after buying at the lower level, go to the higher level and start distributing in the market. So that is what the intentional move is. Why it is called the intentional move? Their intention is to book profit all the time. So this, if you could follow it, then it is very easy for you to understand what is going to be the next move. So after a stop end, they can make only a opposite side stop end. So a downward stop end followed by an upward stop end during the day. And so during the downward spend, you can capture a buy position and book profit during an upward stop end if you happen to be a smart trader. In case they are not done the stop end and they have done the false move, then understand they wanted to make an extended move on the upside or the downside. And if they breach the low, say for example, from that of the low, they go up to that of the high and come below that of the initial low and stay below that of the initial low for more than 30 minutes, start making an extended drop for 2 hours. So that false move, going up to that of the high without breaching the high and coming down, indicate that they had done the false move to continue it as an extended move. Then the intentional move will be the move on the following day. They drop today, then tomorrow they will start gaining the levels. And the extended stop end is the one that they do it only during that of the trend reversal time, during month beginning and month end time. So we cannot expect it now. Now the forecast says that Euro and GBP are expected to make the swing and slide moves in this particular session. So let us think of your position, because we get a good trading opportunity in the case of Euro. So I'm taking a sell position 1.4230, because I told you that they earlier done a downward stop and below that of the initial low during that of the Japanese session. Now they are doing an upward stop. So I had taken a sell position with 30 pips stop. Then GBP, they came up to 61.50 and again they are holding it around 61.39. So they might make a pullback to that of 61.68 is the high. They might come to that of 61.65 before making a drop in order to reverse Euro GBP cross. So we'll get a sell limit order 1.6165, just 3 pips short of the high with an entry stop or the stop of 30 pips. So as far as Euro is concerned, I have taken a sell position and I'm keeping 30 pips above a stop, or it can be a entry stop or a hedging order. And accepting a small loss like 30 pips is not a big deal, and instead of widening the loss to 100 pips. And when you are very clever or when you are very smart in understanding the type of moves, then you can keep even a tight stop of 15 pips also. There comes our smartness. In the case of CHO, you find the spread is about 50 pips. Now they are just 84.58 current level, and 84.62, 84.55 is the low. They just now breached the low as a downward stop, and so we'll take a buy. So it will be a buy position 0.84. We quickly gained it, so let me keep a limit 0.8458. Just 3 pips above that of the low. They set it with a stop of 30 pips. Then in the case of yen, I'm not taking the position because the spread between the low and the high is very low. It's just about 33 pips still. So they are just making a downward move corresponding to that of the rise in the case of Euro and GBP. But still, GBP as well as USD yen are showing negative exchange. If you see it in the live market quote page, I am not displaying it here, but you can see it in the live market quote page. So it is a contrarian move in order to make a downward move in the case of GBPN. So GBPN currently trading around 129.73 and 129.8. 129.51 is the low. They have come closer to the low now. So it's a great opportunity to buy. They are making a downward move, and it is a double edge effect, giving in both the numerator as well as denominator a downward move. So instead of yen, we can buy GBPN. So GBPN current level is 129.76 and 129.83. So I'm taking a buy position with a stop of. See, I'm trying to show you positions or limits in all currencies, but don't simultaneously take like that. It may lead to over trading. So you try to focus on any one currency or two currencies and try to take positions. And when the going is good, take the position in the other currency. That will be better rather than simultaneously taking at a given time the positions in all currencies. And say, for example, you take a sell position in the case of euro, and when the going is good, you can just add another sell position in the case of GBP when they firm it up. And after keeping stop at the entry in the euro position, that will give you enough cushion so that if the market goes against you also, only GBP will be stopped out, and probably euro will be stopped out at the entry. GBP might make a loss. So you will not lose money in both the positions in the event if the market goes against you. So at any given time, the market can go against us. So I always say expect the unexpected in the market, because the big players know the actual positions of the players and try to rig the market up and down, whereas we do not know what is going to happen in the market, what the players have got in their cards. But what you can do is, whatever they have to show it in the market. So in the market, they can only act cunningly. So whenever they make a cunning move, understand, okay, they want to do opposite of it. So when they had dropped euro and GBP, understand they wanted to gain later on. So the first move will be the cunning move that you can understand and try to take the position. So that you can easily understand by looking to that of the live market code page. Then Australian dollar, and the high is 1.0580. The low is 1.0507. Currently, it is closer to the high, and you come across, it is showing positive net change along with that of Canadian dollar. It is a contrarian move. So we can keep SL or limit 1.0577 a stop of 30 pips. So I don't have much time, so I may have to spend time for the answering the questions. So these are all the positions I think of, limit orders in the positions. So let us see how exact, and euro GBP probably will take one sell position. Now euro GBP is currently trading around 88.11. 88.09 was the initial high, and they formed the 88.16. And you know that GBP, they are not making an upward stop, and only in the case of euro they have done it. So this is mainly to gain level in the case of euro GBP to drop later on by gaining levels in GBP and dropping euro. So we'll take a sell position 0.8811 with a stop of 50 pips. Okay. So these are all the positions. Probably you can take a screenshot. I will show it during that of the second part of the webinar, what happened to these positions and how exactly I handle these positions, because I cannot continuously give the webinar. So I will just do the continuation of the trade with these positions and explain to you in detail, and you know that you can track the market now till I come back by 14 GMT and see how exactly I had handled the positions, whether it's been stopped out or whether I was able to keep stop at entry and book profit, things like that, whether my limit orders are filled or they are not filled, or the market filled my position and also hit the stop. All those explanations I'll try to give it, and these are all the possible scenarios, but we are trying to reduce the risk in taking positions in the market whenever the market is only closer to the other high or low. We take the positions. Thereby, we reduce the risk to 50%. Still, there might be a risk, and that we are trying to control it or limit it by using the stop. And once the position makes profit, we keep stop at entry. we reduce or eliminate the risk. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Only I have a few. I'm trying to keep the camera over that of the live market code page. Okay. And try to answer to the questions as much as possible. Okay, not many questions. Then Alex, I am trying to understand, are you looking for top or the bottom? Yeah, I only look for that of the high and the low set for each day. And whenever they are trying to handle a high, see now they went up to 42 in the case of Euro. And 42.24 was the initial high. They just went up only about 20 pips or 22 pips, but actually they created the feel as if they are going to continuously take it up. And if you have watched it carefully, they just gained it quickly and started making red orders. That means they quickly placed a circular trade subsequently and gained the levels. Afterwards, they just dumped all the positions there. So now you come across green order as 42.28, 42.30, and fifth decimal gets changed, so it is still green. And if the order remains there for more than 15 seconds, it will become black. And immediately you will find they will remove the order and place red. They simply remove the order and fill it. So that means they are sellers near that of the high, holding high. So if they are sellers, we will also sell along with them. If they are buyers, we will also buy along with them. That is how we trade. Then in the mid-session, best for trading the crosses. Yes, mid-session, if you trade in crosses, it will be ideal. You will be able to quickly book profit before the end of the session or before the next mid-session. So now European mid-session, I have taken a position. So before US mid-session, I will be able to take a position. Mic is silent here. Okay. Hope people are able to understand. Rami, in the European session, when you say that initial high, you mean in yesterday's high, initial high of today. I am not referring to yesterday, sir. It is only that high. I just simplified it for the understanding of those who are trading in the European session. I am not even calling that of the initial highs and the low set during that of the Japanese session. Still, we will be able to trade. That is what I am trying to do it. So that you simplify your understanding as simple as possible so that your trading decisions will be fast and sensible. So those who are trading from that of Europe, probably they may not be able to see the formation of the initial high and the low. Actually today, the initial high was maintained throughout Japanese session and during early part of the European session. Only now during the webinar time, they made an upward stop. See, they have come below that of 42.24, 42.06, 42.07. See how big they are dumping and pumping it. So you can understand what they are trying to do it now. So at that time, watching that they don't breach in first 10 minutes. They quickly breach the high. After 10 minutes, they don't cut it. And you need not even wait for 30 minutes. You can understand they are trying to do a stop run. And this is implied when they made a downward stop run and started gaining above that of the initial low. So they wanted to do an upward stop run on Friday. So that is what I said. Wait for such moves and try to take the position. I kept a sell order in the case of GBP, which is not materialized, and the market came to only 61.50 and came down. Doesn't matter. If I am not, my order is not filled, I don't regret. And I will look for the next session opportunity and try to take a position. The level is not important for me. Whether I am taking a sell at 61.30 or 63.30, ultimately my position should make profit. That's what I want. So that should be the objective of a trader. Then May, what is your advice regarding on equity amount if someone wants to trade for living? See, if somebody wants to trade living, obviously, you know that what is the cost of living in your particular area. Say, for example, in a month, you may have to spend about $3,000 or $4,000 to lead a very decent life. Then you should be able to earn that much. And this earning, if it becomes about 1 to 2% of your total equity, then that means you are a consistent trader. And if you simply say that I doubled my equity in 1 month, that means out of chance you have taken it, and there is a great chance because of over trading you may lose all the equity in 1 month also. So if you are able to earn about 2 to 5%, that is why the bank interests are so low. They are also trading in the market. They know very well that they will not be able to make miracle, making big monies in the market, because even though they deployed huge money, still they need to wait and patiently handle and accept also small losses and try to trade and try to give money those who are given a deposit and things like that. So that is why the interest rate is being developed based on that. So in a process of that nature, if you want to earn about $3,000 to $5,000 a month, then obviously at least 10 to 15 times of that should be your equity, so that at a given time you can take only 1% of your equity, the position, and you should be able to lead a comfortable life with it and consistently earn about 3 to 5% in a month. If you are sensible enough, then you will be able to increase it to 10% using the hedging. Then Joshi. So based on the requirement, you have to derive the equity. And in case if your equity is fixed, say I have only $5,000, I should be able to earn out of that. Don't think of earning about $5,000, because that will be next to impossible, you keeping $5,000 and earning in a month $5,000. Unless and otherwise you go in for a high risk trade or you participate in the market whenever such a big move happens, like on Wednesday how they had dropped euro, and by chance you can get the profit, but on a daily basis you may not be able to do it. And also look for opportunity to trade rather than becoming addicted to trading, even though you are a full-time trader. So look for a good opportunity in the market, then enter into the market and capture the profit nicely, rather than going for trading during uncertain times. That way you will be able to conserve your equity and also do very limited trade and also maximize the profit in those trades. In Joshi, Euro USD is around 20 minutes over the limit. So do you go for a sell or wait? Yeah, that's what I said. 10 minutes they have been making an upward stop and I have taken a sell. My reading may be wrong. So that is why I kept a stop. So you have to understand that. So if I read, I'm not 100% confident. I'm about 90% confident or 80% confident, but I do not want to take a chance of an unlimited loss. So I have taken 42.30 a sell, and I have kept 30 pips above the stop, so that I can easily accept 30 pips loss, but not 100 pips loss. So that is how I have planned myself. So even though you do your analysis using any type of statistics for that matter, still the element of error can happen between the calculations and the actual market. That error nobody will be able to minimize to zero. So you have to understand that limitation, and for that you have to keep the stop in case if you want to trade without a stop, because I know plenty of traders trade without stop. In such a scenario, I am not simply telling that you have to necessarily keep a stop, otherwise you will be out of the market. I am not trying to tell you. In such a mindset, try to spread your risk. Instead of taking one lot position, you take only one mini lot. In case if they go about 75 to 100 pips above, you take another one mini lot, so that how much they'll be able to rise. The next day they have to do the intentional move, and you should be able to at least earn about 20-30 pips profit as a net profit in all those trades. So that way if you spread the risk, you'll be able to easily trade without a stop. And provided you understand the trend and go along with that of the trend. Then Jenny, you have no set to the limit of for the orders. Sorry, I kept the limit order for GBP, but I taken a position straight away in euro because GBP is not neither near the low nor near the high, so I do not want to enter into that. And if I simply enter it, probably I may be able to get a scalping profit of 5-10 pips. I'm not interested in that, because if I become a scalper, I'll become impulsive. I will miss all great opportunities in the market. Will GBP go up to 1.62 today during that of the upward move? They may not. They may make an upward stop and basically. And Alex, do you send the predetermined target for your euro pair? No, I'll keep the limit initially closer to that of the low. When the going is good, then I'll trail my stop from that of 40 to 30, maintaining about 15 pips to 30 pips away from the market. I'll lower the limit. In case if the going is good, I can continue the trade during that of the euro session. In case they are coming to the low, and after coming to the low, they are not breaching in first 10 minutes, I'll simply close my position near that of the low. Because they have to go and dump it. And that is very important. Because we have to understand their intentions. If they wanted to make simply the swings, then there is no point in waiting for technically 1.4056 or 1.4032 and things like that. Technically, those things might be the low, but the players may not reach up to that level. Because they know, that depending upon the trader's pending position, they try to make the moves in the market. Eric, what is the move in the case of euro? Pump and dump, then they rise again quickly before dropping again. Yeah, they might do that. That is why I kept the stop. At the moment, it appears like pump and dump and an upward stop. What normally is your pip value? The pip value will be 1 here if it is a standard lot, $10. And there are other platforms, they are giving different type of pip values and things like that. I'm just doing a theoretical trade here. I'm not taking that position in a demo or a real account and things like that. When I'm talking to you, I will not be able to do that, definitely. What I meant, is it a 1 USD per pip or higher? So okay, there you are talking about the leverage. So it can be either one mini lot or one standard lot depending upon your visible margin and the type of trading platform. Yarns, is euro performing an extended move? No, I don't think that euro is trying to do that because they are trying to handle that euro GBP cross. For that they are making that upward move in the case of euro, because you would have seen a dump to that of 42.08 and then pumping up. They are just trying to do an up, and they are not breached the high. And probably now they may try to breach the high, but it might be about 1 or 2 pips. They may not make any big move. Because higher level, people are waiting to sell. Those who are holding long positions from Monday, Tuesday, they are waiting to sell. So they will not gain that much. Then Vinay, what about CHF and CAD? They have just finished all the multi-year lows and they wanted to reverse from here. Slowly they will gain the levels in the case of CHF and Canadian dollar. Already Canadian dollar has come to that of 98, and very soon before the end of the month we should be able to see above parity. So these are all the questions. So let me go back to that of the PowerPoint presentation. So these are all the positions I had taken, 40 to 30 in the case of euro. Currently it is trading around 40 to 41 and 40 to 42. They have breached, and 40 to 43 has become the high. They are cutting it by 1 pip like that. So hope it will be stop, and still I got a stop to limit in case if I go wrong. Then limit order in the case of GBP is not been filled. They are coming about 20 pips short of it. Let me see whether they are filling it. Otherwise, I'll modify and try to take closer to that, like 61.60 or 61.58 like that. I will not reduce it to 30 pips and then take market order. Then GBP, CHF, they are not filled the order. They have gone up 84.70. So probably next pullback, I'll try to take a buy. But this is my limit order. Australian dollar, they filled it, and currently it is trading around the same level, 1.0577. So it is a limit. Then GBPN, I have got a buy position, 129.83. Currently it is trading around 129.7986, so around the same level. Then GBP, Euro GBP, I have taken a sell position, and the market has slightly gone up, and it has gone up to 88.24. 88.18 is the current level. So they will try to do because we may not be able to take the position at the highest level, a sell, or a lowest level, the buy. Closer to that, we can take it. Still, we should be able to earn profit. That is the most important thing for us. So I'll come back again by 14 GMT and take my second part of tracking the forex stock market together webinar, and I'll review all the trades what I just committed, and also explain to you how to read the live market code page during that time, and see and relate it to that of the current reading, to that of the US session reading, and see how exactly live market code page can be used as a simple tool to track the market throughout the day. So see you again by 14 GMT. Thank you one and all. Please come back.